Hello everyone and welcome on this new weekly Forex analysis from Xtreme Trader. This is Salah speaking. Before we start, please don't forget to hit the like button and subscribe to the channel and kindly leave a comment and share the video. Also don't forget please to join our free channel of Telegram to receive any updates about these signals that you are receiving here on YouTube and to remain connected to Xtreme Trader to receive all updates and notifications about any signals. The channel name is Xtreme Trader Signals, and you can just simply find the link in the description below of this video. This channel is completely free of cost. You don't have to pay anything at all to join it. So let's now begin analyzing the EURUSD for the upcoming week. So if you guys remember from the last midweek analysis video, which I have sent here last Wednesday, I have sent a signal to buy the EURUSD from 1.161, and based on daily chart, this signal simply remains valid because we have here the bullish breakout candle, as we can see, and we actually want to buy the EURUSD right on the nearest level of the support to this bullish breakout candle. And by simply tracking the daily candles, we can simply notice that this is right here the nearest level of a support to that bullish breakout candle. Also, not to mention that based on daily chart, we also have here a broken level of a resistance trend line, which actually right now becoming a new support trend line. Therefore, this signal, my friends, simply remains valid, and I think we can still buy the EURUSD from 1.161. Therefore, the analysis for the EURUSD from the last week remains the same. Let's now move to the Pound USD. Now, Pound USD, as you can see, has already hit the TP from the last midweek analysis, but actually the trade hasn't been triggered. What a bummer. Look at that. Excellent reversal if it would actually have been triggered. However, what can we expect right now next with the Pound USD? Well, Pound USD actually still remains bullish, my friends. If we look right now at the weekly chart, this is of course the weekly chart, we are going to apply simply the same rules. So again, we have right here the bullish breakout candle, and right here we have the nearest level of a support to that bullish breakout candle. Not to mention that actually, based on the weekly candle, we had right here of course a real level of a support, as we can see, because here we had of course a real level. Actually, it's even more than that. 1 second. Let me just expand it a little bit. Exactly. So as you can see, my friends, based on weekly chart, we had right here of course a strong real level of a support, which actually has been holding the position since April. And again, the same level of a real support again in back in July, and again back in September. And right here we have of course a fake breakout, which looks actually really good, because it means we can actually consider buying the Pound USD once it retests the same level of a real support, and hopefully the pair will continue the rise. Therefore, if we move right now to daily chart, so right now we have here daily chart, and if we just simply check the Fibonacci retracement on the recent structure that we have, so meaning if we draw the Fibonacci right from this high to this low, as you can see, fantastic, check this out. So actually it's pointing exactly at Fibonacci 38.2. Now, Fibonacci 38.2 is exactly the continuation retracement. Therefore, we are actually expecting from the Pound USD to drop a little bit more to reach the same level of a real support, retesting the broken level of a resistance exactly at 1.328, which is of course Fibonacci 38.2. And from that point onward, hopefully the Pound USD will continue the rise. Now, since we're talking about daily candles, I would actually consider to take our TP exactly right here at Fibonacci 61.8, which means our TP in this case is going to be around 163 pips. However, the stop loss shouldn't actually be lower than the previous level of support right here exactly. Actually, a little bit lower than that, just like that, at 1.322, which means our stop loss is going to be around 60 pips only, against 165 pips, hopefully of profit. Let me now please write the signal for you. And that will be all, my friends, for the Pound USD. Let's now move to the AUD USD. Alright, so AUD USD also from the last midweek analysis actually has went in the right direction, but unfortunately has not triggered our buy order at 0.653. But look at that, the AUD USD rising here is really weird. I mean, it doesn't really give any chance to buy. There is barely any pullbacks. Wow. However, what can we do next right now with the AUD USD? From my point of view, this pair most likely will continue the rise. Now, let's look at daily chart. So right now, daily chart shows, of course, a strong bullish breakout from the channel, as we can see right here. So AUD USD actually is right now making a bullish breakout from that channel, and now most likely it will actually continue the rise. Why? because on the bigger picture, based on daily chart, we can see right here clearly a support trend line number 1, a support trend line number 2, and right now here the fake breakout happened. So again, real level of a support number 1, support trend line, support trend line number 2, and then here a fake breakout, and as you can see, the continuation of the rise. Now, I don't think that the AUDUSD has any chances to make that long pullback then continue the rise. No. It seems like the market is actually on a strong bullish momentum and most likely will continue the rise even faster than that, which means, if I'm not mistaken, we can actually move the support trend line to be right here exactly, as you can see. Therefore, the market must likely, my friends, because here we have, of course, a support trend line number 1, support trend line number 2, which became here a resistance trend line number 1, then instantly has been broken out from. That actually confirms a very strong bullish momentum. So our best chances is waiting for the AUDUSD to make a pullback right here, and hopefully it will respect the previous level of a support trend line, which became also a resistance trend line, and then hopefully will continue the rise toward the resistance exactly at 0.671. That being said, let's now move to the 4-hour time frame. Alright, so now based on the 4-hour time frame, as we can see right here, the support trend line, as we can see now, from my point of view, I believe our best chances is to simply draw the Fibonacci right from this high to this low right here, and what we can see right now. What we can see is the bullish breakout from Fibonacci 61.8, and as we all know, guys, from Xtreme Trader, once you have a downtrend like this one right here, or a downtrend channel like this, once you see the bullish breakout from 61.8 Fibonacci retracement, it actually means that the trend is no longer a downtrend. It's right now becoming a strong upper trend. That being said, let's consider rebuying the AUDUSD exactly at Fibonacci 61.8, which actually matches with that previous level of a support trend line, and hopefully the pair will continue to rise at least to reach Fibonacci 119. It actually even has chances to rise even more to reach 161.8. But for the sake of the signal, let's place our buy exactly at 0.660 and aiming Fibonacci 119 at 0.6676, aiming around 156 pips. Hopefully it's going to be in profit. However, the stop loss in this case shouldn't actually be ranging much lower than Fibonacci 38.2. Why? Because the market actually still has a chance to be ranging right here exactly at Fibonacci 50 and 38.2, and actually might respect the previous level of a support right here before continue the rise. So I know the stop loss is going to be a little bit bigger this time. It's going to be around 91 pips. I know, guys, it's really a lot, but that's what is giving us. Also, the strong bullish momentum in the AUDUSD makes me really doubt if the pair will ever make that pullback. However, in this case, our TP is also going to be around 160 pips. Let me now please write the signal for you. That will be all, my friends, for the AUDUSD. Let's now move to the USD CAD. So this was our signal from the last midweek analysis to sell the USD CAD from 1.398. And as you can see, the instant drop happened. Unfortunately, this signal has not been triggered. We actually have missed a sweet 160 pips. However, what will gonna happen next now with the USD CAD? First of all, deleting the old signal and moving as usual to the weekly chart. Alright, so now based on right now on the weekly chart, we will apply the same method that we actually have applied back on the EURUSD and the GBPUSD, which means we will just simply look to sell the USD CAD exactly right here at the previous level of a resistance, which is the nearest one to that bearish breakout candle. But again, we still need more confirmation on that, right? So allow me please right now to move back to daily chart. So based on daily chart, we need right now to check the Fibonacci retracement. So what we can do right now is simply draw the Fibonacci right from this low right here to this high, as we can see. Now what can we see right now? What can we see right now here? Let me just show you. So what we are seeing is that the market right now actually has closed Friday night exactly at Fibonacci 50, which actually gives a chance for a pullback to happen. If that happens, the market, since it actually right now on a strong downtrend, and not only that, but also has made here a bearish breakout from this channel. Let me just show it to you right here. Alright, so now here actually we actually have a bearish breakout from this channel. So the USD CAD actually has a chance right now to pull back and retest exactly Fibonacci 38.2 and then continue the rise. However, based on the structure that I see right here, I'm actually expecting the pullback to occur sooner than that. I'm actually expecting the pullback to happen exactly right here at 1.386. Why? Because based on daily chart, as you can see, this is right here the nearest level of a real resistance to this bearish breakout candle. So I actually would suggest to sell the USDCAD exactly right here. However, we can expect a small drawdown of around just like 30 pips only till the market reach Fibonacci 38.2, and then this trade most likely is gonna start be in profit, hopefully, of course. So to not miss this trade, I will actually risk 30 pips of a drawdown. So therefore we will sell the USDCAD exactly at 1.386. However, if in this case we sell, our TP is gonna be exactly right here, almost at Fibonacci 38.2, aiming around 130 pips. Hopefully it's gonna be in profit. However, the stop loss shouldn't actually, my friends, be ranging much higher than the previous level of a real resistance, as we can see right here at 1.394. Actually even lower than that. This is too high. Our stop loss is going to be around 61 pips against 130 pips, hopefully in profit. Let me now please write the signal for you. That will be all, my friends, for the USDCAD. Let's now move to the USDJPY. Alright, so USDJPY signal also hasn't been triggered, but also at least went in the right direction and hit the TP. But again, sadly, hasn't been triggered. Of course, my friends, all of these signals are from the last midweek analysis. However, let's now see what we can do next with this pair. So from basic support and resistance, and let me just make it short for you, I would actually consider buying the USDJPY exactly at right here, to be honest with you guys, and make it clear for you, exactly right here. Why right here, Salah? Well, for a simple reason. Let me just make sure it's clear. At 155.048. Yeah, but tell us why. Sure, I will tell you why. Because based on daily chart, based on the 4-hour time frame, first of all, we have right here, of course, a real level of a support, which was, of course, a real level of a resistance, as we can see in the past. However, we had here one fake breakout, then 2 fake breakouts, and finally 3 fake breakouts. A fake breakout tells us that the market actually has failed to continue the fall, and every bearish breakout candle has actually been screwed up. And as we can see, we also have right here another real level of a support. So not only that, but also by simply looking at the entire structure, let me just show it to you. Right here exactly, we have, of course, a broken level of a resistance trend line, as we can see, or actually a channel that has just been abandoned. And that tells us that the USDJPY most likely will indeed, after abandoning this channel, is going to continue the rise. Therefore, by simply looking at the 4-hour time frame, we can actually consider buying exactly after a pullback of around 30 pips at 155.058. However, if we buy at this area, our TP shouldn't actually be higher than the beginning of the previous channel at the resistance at 156.165, aiming around 111 pips in profit. However, in this case, our stop loss shouldn't actually be ranging much lower than the previous level of a real support right here exactly at 154.636, which will be ranging for around 40 pips. That is really one I think it's gonna be good risk to reward ratio. Hopefully it's gonna play well. Let me now please write the signal for you. And that will be all, my friends, for this weekly analysis, because I'm going to skip the Bitcoin again. Our last signal to buy the Bitcoin at 91,891 actually has failed, as you can see. Of course, guys, we cannot hide the losses. They are simply part of trading. However, why am I going to skip the Bitcoin this week as well? Because, my friends, the pair is just simply moving randomly. I mean, I actually have been trying myself to trade the Bitcoin last week, and it would just keep making random movements. As you can see right here, this unexplained fake breakout happened right here. Another fake breakout happened right here from the resistance, and then a strong bearish momentum. I mean, the Bitcoin is actually facing unusual pressure right now. So it actually gives us a lot of mixed signals. So for the safety of the funds of my followers, I would recommend to stay away from the Bitcoin for the meantime until we figure out what the hell is going on here. So we need to see a clear bearish, bearish or a bullish breakout from this structure that we have right here. Before that, it's going to be really difficult and risky to send any analysis to the Bitcoin. I said before, my friends, in the past, the problem with the crypto market, it's really a random market, and it's really doesn't really follow any rules. For example, for the gold, we know, for example, if the Fed's gonna announce cut in the interest rate, we know that if the cut is gonna happen, then the gold most likely will continue the rise. If there is no interest rate cut, it will be actually a bearish move for the gold. We can rely on the tone of Mr. Jerome Powell to know if it's hawkish or dovish, to know if it's gonna be bullish or bearish. However, this is what's happening in the global market. But when we're talking about the crypto doesn't really follow any of that. It's just really a big balloon that will explode at any moment. And that's exactly what's happening right now. Bitcoin and entire crypto market just being based on the supply and demand, and that's it. It's unlike the global market, which relies on the news and the events. No. Crypto is different. Crypto is just relying on the trending and the demanding and support and the supplying and demand, and that's it. If the people buying the Bitcoin is gonna rise. If people are getting crazy and selling it, it's gonna be bearish. That's the thing with the crypto, and that's really what makes me really hate it. However, let's now skip it for the meantime and wait till we see a clear breakout from this structure. So this is gonna be, my friends, everything for the weekly analysis. And in the end, don't forget again, my friends, to join our free channel of Telegram to stay connected to us through Telegram. The channel name again is Xtreme Trader Signals, and you can just simply find the link in the description below of this video. So until then, my friends, I hope that was informative to you, and I would like to thank you for watching.